Living off dividends means your portfolio generates a passive income stream that can cover your expenses indefinitely. No more punching the clock to earn a paycheck or worrying about your portfolio's fluctuating value as long as the dividends keep rolling in. Forget having to sell off your assets when you hit retirement. Instead, imagine building a profitable portfolio stacked with stocks from companies that love sharing their profits. Those regular dividends become your steady income, and it's not just about the money. It's about feeling steady and secure on an otherwise wild ride. The best part? You get to kick back a bit more, trading the hustle for a lifestyle that's more about living and less about just making a buck. Let's take a look at exactly what it would look like to live off dividends, how much income you could expect to receive, and how you can create a reliable, robust income stream that will pay your bills each month. Dividend investing is a strategy centered around building a portfolio of stocks or other income-generating assets with the primary goal of receiving regular dividend payments. Dividends are a portion of a company's profits passed out to its shareholders, typically in the form of cash or additional shares. Investors who invest for dividends prioritize companies that have a history of consistent dividend payouts and a strong financial standing. The appeal of this approach lies in the dual benefit of potential capital appreciation and a steady stream of income. Unlike relying solely on the sale of stocks for returns, dividend investors aim to create a resilient and self-sustaining source of cash flow. This strategy not only provides investors with a regular income stream, but also creates a long-term, patient investment mindset, as the compounding effect of reinvested dividends can significantly enhance overall returns over time. Dividends, like tiny snowflakes, might start small, but their power lies in their ability to compound and snowball over time. Initially modest payouts, when reinvested, become the building blocks for a financial snowball effect. As each dividend payment gets plowed back into the investment, it generates additional earnings. This compounding effect is like a snowball rolling downhill, gathering momentum and growing in size. Over the long term, the compounding power of reinvested dividends can transform a small initial investment into a substantial wealth-building force. It's not about the immediate impact, but rather the strength that dividends gain as they multiply and accumulate, creating a financial snowball that steadily grows and gains momentum with each passing period. Unlike other investment strategies that force you to sell off your stocks to cash in, dividends hook you up with a regular flow of income while letting you keep your shares intact. This is like having the best of both worlds. You get to hang onto your shares and receive nominal cash payments. This not only means a consistent paycheck without the hassle of hitting the sell button, but also lets you ride out the market waves without sweating it. So you get to kick back, watch your portfolio grow, and still have the luxury of a steady cash infusion. This is the kind of win-win situation that makes dividend investing a desirable choice for those who prefer a less hands-on approach to reaping the rewards of their investments. Hitting the sell button only to watch the share price of those stocks or funds rise immediately after, which it will most of the time, is frustrating and mentally draining, even more so during retirement. In addition, emotional weight attached to selling off assets that may have been carefully accumulated over the years can be downright taxing. It's not just about the numbers on the screen. It's about parting with those shares that took a lifetime to accumulate, and each of those shares is telling a story of financial discipline and foresight. The choice to sell becomes a balancing act as retirees grapple with the desire to enjoy the fruits of their labor while ensuring a sustainable income stream. The psychological toll is often palpable, as each sale represents a relinquishing of a financial security blanket. Amidst market fluctuations and the uncertainty of future returns, the mental toll of selling investments during retirement showcases the balancing act between smart financial moves and the emotional attachment to a lifetime of financial choices. The regular cash flow from dividends operates as a financial lighthouse, casting a reassuring glow over the seas of uncertainty. The steady cash flow provides unparalleled peace of mind, as you can easily anticipate when your next dividend will arrive and how much it will be. Unlike the unpredictable whims of the market, dividends offer a steady and dependable income stream. This reliability transforms financial planning from a nerve-wracking guessing game into a tranquil experience. The consistent nature of dividend payments provides a sense of security, allowing you to weather economic storms with confidence. In many cases, even a large drop in portfolio value won't affect your dividend income. Whether it's covering daily expenses or funding retirement dreams, the peace of mind that comes from knowing there's a reliable cash flow stream can be a game changer. Some people might discount the value of peace of mind, but success with money is 90% behavior, and the more worried and scared you become, the harder it is to continue investing through all market cycles. In a world where financial worries often loom large, dividends serve as a calming force, reminding investors that regardless of market fluctuations, a regular and predictable income is there to anchor their financial ship. A well-constructed dividend portfolio with a focus on steady and incremental growth coupled with regular dividend payouts typically generates an annual cash flow ranging from 2% to 5%. Safely expect an annual cash flow of 3% on your investment through dividends. In this scenario, you receive 3% of the total value of your investment portfolio each year, while the overall value of your investments hopefully increases over time. This part is crucial because some dividend-paying assets might present a misleading appearance of profitability. Despite offering a high dividend, the share value might remain stagnant, failing to keep up with inflation, or in a worst-case scenario, experience a decline in share price, defeating the point of this strategy entirely. Avoiding this pitfall is the primary mistake that investors often make when prioritizing dividends, and it's essential to steer clear of it entirely. Investing in dividend ETFs or exchange-traded funds presents a multifaceted advantage for investors seeking a balanced and income-driven portfolio. These funds pool together a diverse range of dividend-paying stocks, providing immediate access to a broad selection of companies with a history of sharing profits with shareholders. The benefit lies not only in the convenience of diversification, but also in the efficiency of managing a portfolio without the need for individual stock selection. Dividend ETFs offer a hands-off approach, allowing investors to tap into the potential of income generation and capital appreciation without the trouble of managing individual stocks. This method not only streamlines the investment process, but also mitigates the risk associated with the performance of individual companies. It's a pragmatic and effective way to harness the power of dividends as a reliable income source while enjoying the inherent advantages of a diversified investment strategy. Getting into dividend investing isn't just about making money, it's also about catching a break on taxes. Unlike some other ways you can make cash from your investments, the money you get from dividends often gets a better deal on taxes. In many cases, the taxman takes it easier on your dividend earnings compared to other types of investment income. This special treatment can mean less cash going to the taxman and more staying in your pocket. Plus, some dividends even get extra perks, like a lower tax rate than your regular income. If you're planning to stick around in the investing game for a long time, you might also score some tax deferral benefits by holding onto your dividend-paying investments. So, beyond the financial gains, diving into dividend investing can be a smart move for keeping more of what you earn when tax time rolls around. Living on dividends is a lifestyle choice that prioritizes financial independence, stability, and flexibility without the mental drain. Like any strategy, living on dividends has its pros and cons, but the financial and mental benefits you receive from not being forced to sell off investments that took decades to accumulate can be well worth the trade-offs. By strategically building and managing a portfolio of dividend-paying investments, you can create a reliable income stream that aligns with your long-term financial goals.